Hello, hello, hello. Let's get started here. We've got a lot going on in the market, an absolute lot. We've got a couple of small banks. We've got a run on banks happening right now, and a couple of big opportunities that I think are going to emerge over the next couple of weeks, along with a host of problems that we all need to be mindful of as these small regional banks might continue to see pressure toward the downside. So, to start very quickly, I want to say hello, get everybody in here. Feel free to share this out to your friends, your family, your grandma, your uncles, and everyone you know so that they know exactly what they need to be doing with their money in this market, as it is a tumultuous market. So, very quickly, I don't want to get too deep into what a run on a bank is, but it's essentially a liquidity crisis in which the bank cannot meet the demands of the withdrawals. And when that happens, the bank can become insolvent. And short of bailout, it means they're absolutely screwed. Now, here's where it poses the real problem and a few opportunities that we're going to look at. We talked puts on Roku over, I think it was over a year ago when we were talking Roku puts when it was trading around $400. We took the $150 puts over a year out. Those were up, I want to say, over an egregious amount of almost, I think, 2,000% at the end of the road. I rode those up to about 700% gain and close the position because, again, always take profit over everything. But we can see with the Roku chart here, it has fallen from grace, and this will be one of the companies I think most significantly impacted by this SVB bank crash because they had so much money on deposit at this bank. So when this bank, God forbid, but it's already happening, when this bank gets absolutely crushed, which it has, how's Roku going to pay its employees? How's Roku going to fund its operation? If their cash, if any portion of their operating cash exists at this bank and they get destroyed, the bank gets destroyed. What are they going to do? Right? Bailout. I mean, that's really the only option. Because at the end of the day, if the bank becomes insolvent due to the diversity of their investments, which, as far as I've read, have been quite risky, we can see a significant problem emerge here. So we just want to give it a second. I just want to give you a brief rundown of exactly what we're going to be doing, guys. Feel free to share this out. I'd love for you to leave a comment, introduce yourself. If you're on Discord, let me know who you are so that I can get a good idea of who we've got here watching this right now. If you're new, just say hello, introduce yourself as well. We love new people. I want to teach you. We're going to learn. You're going to get pretty much all the introductory information you're going to need to trade options. You're going to get a couple of trade ideas that you can watch throughout the week or take on your own and make some money. And then we will discuss a couple of other things, amongst them being one or two small cap stocks that I do really like right now. And I think that we have some big opportunity to make some money on. So we're going to watch those closely. We're going to discuss ideas, and we are going to most importantly deep dive into how to trade this options market given the current conditions we're facing with these banks getting destroyed. You have to be very, very, very aware of some of these news and macro market events if you're trading options, because options are such sensitive instruments. And given that they are, we have to be very, very aware of how exactly they are going to affect us going forward. Because if you are trading an option that you had no idea was going to be tied into this, like Roku, for example, trading calls on Roku only to find out that 500 million or so of their operating cash is getting absolutely swiped. I think they said 50-cent reimbursement on the dollar, which would mean that Roku would essentially shrink their operating cash at SVB from 500 million to about 250, which is a substantial sum. And understand these tech companies are typically highly leveraged. So we need to be very, very, very careful about exactly how we trade this. We got everybody coming in here. Welcome, welcome, welcome. How you guys living? How you guys living? Let's see. Now that would be very interesting, Frank. I really hope that that's the case, because you don't want to see any investors fleeced out of their money. Now, as I understand it, the net deposit, the median net deposit was typically over $1 million. Because remember, the FDIC will insure up to 250,000. However, when you have 20 million in there, you're 250K isn't really much as far as what you get back. So if that's the case, I really hope that's the case. Then we might be okay. I mean, this could be a really, oh, there we go. So 25 billion backstop funding from the Fed. Well, hooray. Congratulations once again for all of us. This is a win, right? We get to pay our taxes, pay our money, and we get to bail them out, which is always fun. So that's how I assumed this would go. And I guess that's how it's going to go. I haven't looked at this any further. If you guys have a link, feel free to post it in the YouTube chat. Again, welcome. We saw about 10 more of you guys come in here. Introduce yourself. If you're on Discord, drop your name in here so I know who you are. If you're not, just say hello. Tell us that you're new so we can get you all the things you need, get you in the Discord, get you all the live trade alerts, the free trading education, and make sure that you guys are on the right road to trading options successfully, which, in my opinion, is the single greatest way to build wealth in the current landscape of our economic system. Options are wonderful because you can see immense and monumental gains on such short periods of time with minimal cash locked up in the trade. So, if that's the case and they do get that 25 billion backstop funding, I guess then they will probably be okay. So looking at this Roku chart, once again, remember they are going to be heavily affected. I mean, do they get their money back? Yes. I think that fear is going to still come into the market. People are going to be scared. And should this open up a little bit red on Monday morning, tomorrow morning, I think that we need to be very mindful of what we could see here to the downside, especially for those of you with a long position. I have sold. I still have some, so I'm pretty much screwed on that. But the rest, I got out of a while ago when we didn't break that uptrend. So I think realistically, we could very well see a dump down to 40, and even lower, we could see a dump down to $24. Now, remember that was back in 2018. That was a pre-COVID low, which is something to be mindful of and to consider. What we were hoping to see here is that this low right here, coming off of mid 2020, it was basically beginning of COVID when the whole market tanked. We were hoping that low would be priced in, and then that's where we'd see our max downside, which this chart was actually setting up like it was going to do something. Strong buying coming in at about 40, $50, pushed it all the way up to 76. It was a great trade, but I don't think that this thing is going to sustain. I could see Monday being brutal. So make sure you keep this at the top of your watch list for either short or put position. If you do open one, remember the implied volatility is going to be inflated, and this is going to be a risky trade. But I think realistically, we could trade this down to $30 if it gets beat down bad enough. Now, if the government's going to bail them out, then you don't have to worry too much. But again, unless somebody has that on high authority, I would trade that very carefully. So that's a quick update on Roku, just so you guys know exactly how to go into this one on Monday. I would watch for a breakdown here, depending on where it opens. If we shrink below, 52, $53, I think we very likely could see 40. And if we do, those 40 puts will look pretty juicy. But keep in mind, if that bailout news comes, this thing could have the opposite effect, rebound to the upside, and absolutely shred those puts. So make sure you keep that. If you're new, again, welcome. Introduce yourself. If you're new, just say hello so we know exactly how to direct you with all the information you're going to need. I highly suggest that those of you that are here take some notes, get a notebook out so you can write down some of what we're going to talk about. And I would also have your chart open so that you can identify these price levels and get in there with us so that you understand exactly what we're doing. We're going to talk options. We're going to talk a couple small cap stocks. We're going to talk trading strategy. And most importantly, we're going to talk about how we're going to make money going into this week. So I think everybody's here. Again, introduce yourself. If you're new, if you're from Discord, drop your name so we know who you are. Feel free to share this out to family and friends. We'd appreciate it. And so would they. So let's get into it. So we're going to open up here. We're going to move to the S&P, SPY, SPY. Go ahead and type that in the search bar. We had a very, very red day and a very red week. We shrank down below. Remember, just to give you guys a quick update for those of you that maybe haven't been here before, this is what we were looking at. Let's get this. Let's shrink that volume down a little bit. We'll shrink this down a little bit too. Give us some more room. So we've been watching this zone right here from 393 up to 412. That's kind of our money zone. We know how to trade that. We know how to trade that well. We broke out of that zone. And as we mentioned in the live stream last week, and as I've also posted in Discord, when we broke below 397, puts was the move. Those paid handsomely. This came down to 384. You had a huge opportunity to make a couple $1,000 on that one trade. As you can see here, it followed the price action exactly like we thought it would. Once it broke, came down, tried to get a little bit of a dead cat bounce, hit the top of the range we identified right here, and then sank into oblivion, connecting there with the descending resistance that had become descending support, but might once again become descending resistance if this comes down any further. So how are we going to trade this into the next week? Well, this zone is out of the picture, so now we need a new one. How are we going to figure that out? We're going to map this out. So again, if you're new to options trading, something very beneficial for you is to just simply learn how to identify trading ranges, meaning bottom price, top price, and you trade it within that range. If you can do that consistently, you'll make money trading options for the rest of your life. It is a very simple trading strategy that is very effective and can be done in any market. It is completely outside of market conditions. It's irrelevant because you are trading a range. So again, new options traders, we're going to teach you exactly how to range trade these. Which, in my opinion, is the safest and most consistent way to trade options, and it has been a huge, very profitable strategy for me for the last couple of years. So looking here, we've got range 3. Remember, we identified that back in the day when we were trading around here. I think we are going to look to fill the rest of this range out. So where does that go? It's top side 397. Mark that on your chart. Downside 374. Mark that on your chart. Again, if you can have the chart up or you got a notebook out, make sure you write these price levels down because we are going to break out your next range for you that you're going to watch to trade for the rest of this week. We are going to disregard this old support trend line. Doesn't matter to us right now because we're not going to be trading the upside right here because it just doesn't make sense unless we see a strong push it open. And that's the only case. If some sort of macro news comes out that tells us, hey, guys, we're going to be getting a ton of funding from the federal government, then that's the only way that we're doing that. So we broke that descending resistance that turned to descending support. It is now descending resistance again because the price is below it. That matters because we know what our max upside is if we're trading calls off the bottom. So we've got range 3 right here. That's the one we'll make it a little bigger so that we know exactly what we're looking at. I don't even remember how to make it bigger, so never mind. Never mind. So range 3 right here. The top of range 3 is about 396.50. The bottom of range 3 is 374.30. Go ahead and mark that on your chart or write that in a notebook. You're going to need that information for later. So what are we going to do with this? We're trading in the middle of purgatory right now with significant sell volume coming in off of this break of the descending support. What does that mean? I'm going to give you guys a second to answer this, see who knows what and how well you know it. Where are we right now? I talk about it every week. Where are we at right now? It's a 9-letter word. It's not heaven. It's not hell. It's, come on, middle of nowhere, nothing to do. What am I talking about here? A lot. You can absolutely be here. That's why you're here right now, my friend. You're going to learn options today. The answer is purgatory. This is not the ideal place to take any trade. So we're going to watch this and we're going to map out our intraday trades, meaning day trades for, no man's land. Frank, boom, there it is. Frank the tank, Frank the man, coming in and crushing it. That's exactly right. So we are in the middle of no man's land. We are in between the top and the bottom of this range, which means our risk is highest and our profit has been essentially slashed in half. Remember, if we're trading from the bottom of the range to the top, we have maximized our profit potential and hedged against risk because we know if we bottom out on a trade in the bottom of the range and it breaks below our support, we can trade puts to the next range down. It's an extremely calculated. This isn't heaven. This is Iowa. You damn right about that. I hope you're actually in Iowa. So, and there's the answer. Well, you guys both got it, Tyler and Jacob. Purgatory. So did Nikki. So, what we are going to watch for tomorrow, this is very important. So make sure you write this down on your chart. Top side 396.50, bottom side 374.30. That's what we're watching on the SPY. These are two of the most important price levels you will map out for the rest of the week. And we're going to throw one more on here as our midline because I think this is going to be an important zone, right? We're going to make this a different color so that we can differentiate between the top and the bottom. This is going to be kind of our make or break point. And it just so happens to be kind of mid-range. That's good. So we are trading below this line, and we can see this line is 387. We'll call it 387 even just to make it easy, right? We're going to call this 387 just about. If we stay below 387, here's what we're going to do. We are going to continue to rock puts. I would aim at 379, 380. I would add 2 weeks or more expiration. And the stop loss on these would be a breakout above 387 and consolidation. So what we'd need to see is the price to stay below 387. We'd see candle come down. This is what we want to see. I'll draw it out so you guys can see exactly what I'm talking about here. That makes things easier. Not staying drawing mode. That's not what I wanted. Drawing tool. So should we open up, right, and we retest this and we hold, and then we just trade down, That's what makes this puts trade extremely effective. It will make you a killing. And this is how we can manage risk. When we come down at open, or if we push back up at open, all we want to see here is that it tests this resistance or blows through it, so that we know if we can continue trading to the downside or if we need to flip our trade to the upside. Again, the point of this is to minimize risk and be able to pivot on a moment's notice. I don't love this trade, but it can make money and the risk is calculated. So if we open and we push up to about 387, that would be the time to enter the position. If it breaks up over 387 and it holds, no go, take your loss, call it 5-10%. I couldn't see it being more than that. Get out of the trade and watch for consolidation above 387. If you get it, then we're trading calls to the upside because we're probably going to have a strong day. I do not see this hanging around in the middle. I think it's going to go up or down. Now, if we push up to 387 and we hit resistance and get rejected, then we are going to probably come down to about 379, 380 over the next couple of trading sessions, unless we get significant news from the federal government that says, hey, we're going to start printing money again. Everybody's going to be fine. We just want to give out free money. The market's going to rip and rally if that happens. We want to immediately pivot to the upside if that happens. I don't think that's going to happen, but I just want you to be aware of it in case it does. So that's our play for the morning, in my opinion. We're going to watch a test of 387 to see if it breaks up. And if it does break up, we're going to see if it holds and consolidates above 387. As you can see, it was testing it in after hours. If it opens up and stays above 387, here's what we're doing. So we got our put strategy. We've got our play. If we're going puts, if we're going bearish, we've got the play. And I hope you guys wrote that down. Always take some notes because we gave you the trade, the strike, the expiration, and exactly how to play it. Now we're going to give you that same thing to the upside. If the SPY can open up strong above 387 and continue to stay above 387, then we are going to look to trade. I would say 390 calls would be quite sensible and safe, and that's probably where we'll test is the bottom of this range on this day, right? So it came down to 390 back, this was 2 days prior, so 2 trading sessions ago. So this was Thursday. We traded down to about 390, and then we held up until we opened low, came up again, hit resistance, and came back down. So I would say that 390 would probably be where we'd bump our heads on this if we open strong. So this is the bull scenario. We open strong, we stay above 387, only above 387. The play's dead otherwise. And we please, 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 I'm going to type it in here. I'm going to type it in here so everybody can see it. So this is going to be our pivot point. Above 387, we are looking bullish. Below 387, we are looking bearish intraday, meaning a trade that we are going to look at for tomorrow only, not hold for 6 weeks, not hold for 2 weeks, but we are going to buy 2 weeks expiration so that theta does not destroy these contracts. Remember, options, the longer you hold them, become increasingly less valuable simply because you own them. Doesn't even matter if they're to the upside or not. So basically, we opened strong above 387. We were looking to trade 390 calls, 2 weeks expiration. You can make a nice 20-30% there. If it continues going up, I'd say you could hold to about 392. Past then, I wouldn't take more risks than that, and you could get a nice 50 to 100% trade. If this breaks below 387 and cannot hold above 387, we are once again looking at 2 weeks out, 379. I would say 380 puts would be the smartest, most sensible option. That's going to give you enough cushion and enough upside without being too far out of the money that you're not going to see the return that you're looking for. So significant volume increase is giving us a lot of opportunity here. Again, we traded up to 407. That was a great bull run. We traded that all the way up. We came down. This played exactly as we said. If you guys recall, if you've been on the stream before, we were talking below 396. We were trading puts. And as you can see, it broke below 396. We were right. Came down almost $12 swing in price, meaning that you got well over 100% on those if you took them. So our bull scenario is above 387. We're going to look at the 390 calls, and we're going to trade those potentially up to 392 if we hold up and see a strong move up. The bear scenario is we cannot hold 387. We come down below 387, hit resistance, and then we trade that down to about 383, 382 bucks. We're looking at the $380 strike at least 2 weeks out on these guys. Do not trade intradays. Do not trade weeklies unless you absolutely know what you're doing and have been doing this for years, or you will destroy your account. Absolutely destroy it. Yes, you can make an egregious amount of money, but if you destroy your account, you will make absolutely nothing. It's the most important lesson for options traders is to understand that the only real victory here, guys, is staying in the game. If you can stay in the game and preserve your capital, it means you have firepower. If you have a gun and no bullets, what good is it to you? It's not. You have to have capital to trade and make the maximum amount of money with the least amount of risk. This is how we do it. We've got our bullish play, we've got our bearish play. We're going to trade them exactly as we just discussed on this stream. If you missed that part, feel free to rewind. We went through the bull scenario and the bear scenario to give you the exact strikes, the exact expirations, and the exact strategy as to how I'm going to trade it. And I think that we will absolutely nail these no matter which way it goes. That's the most important thing here. Most important thing. I can't say it enough. It doesn't matter if it's to the upside or the downside. All that matters to me is that we make money. I don't give a shit which way it goes. I don't care why. I just care that it goes up, it goes down. We trade the volatility, we make our money, and we go on to the next one. We have to follow these price guidelines because they are essential to the trades I have discussed. I'm not an advisor. I'm not your daddy. I'm not a broker. So make sure you follow this. You're putting your money on the line. You're taking the risk. I would follow those price levels because that's your best chance to succeed. So that's our scenario. I want to also throw this out. Now, this is a bit speculative. This is a bit sexy. It's a bit dicey, and I want to preface it with a word of caution. I saw a very interesting opinion on the S&P, and I can't remember exactly what it was. Some guy was talking about like the 200-day slow moving average, which I don't necessarily use, but I wanted to pull it up just so we could take a look together. I haven't had a chance to look at it otherwise. I took the children to the Wisconsin Dells and they loved it, but I was busy all weekend. Where the hell is the is it slow moving average? I don't even know. SMA, simple moving average. Is it simple moving average? Is that what it is? I don't ever use it. Can someone help me out with that? Is it simple moving average, slow moving average? I don't even see it on here. I guess we could use the regular moving averages, but let's go ahead and get those in. It's simple moving average. Interesting. So no, I can't remember what it is exactly that he said, but he said that SPY was trading above it. It was a bounce off of it, which I haven't seen anything like that. And if you guys didn't know, I'm going to give you a quick setup here that will absolutely change your life with the exponential moving averages. So if you guys can't see these values here, feel free to screenshot this and write it down. This is a model that I use all the time. It is extremely effective for options traders, stock traders, crypto traders, does not matter. It's one of the best measurement tools based on relativity than anything else. Remember, these are all lagging, not leading indicators, which means it's stuff that already happened. But I like the 8-day EMA, the 13-day EMA, the 34, and then I keep the 200 on there. You could throw the 50 if you're feeling dicey, but you don't have to. So what I like to see when I'm looking at this, especially for our swing trades, is I'd love to see that 8-day cross over the 34. 8-day over the 13. As you can see, we got that upswing here. This would have been a perfect opportunity. This is why we alerted the swing trade. The 8-day swings up across the 13, and SPY moves from 387 to 418 before it comes down. You could have taken a 400 or 500% trade on that. This is a very simple technique that has been extremely useful and effective. I try to keep this simple. Again, we trade these individual ranges, top and bottom, and we use simple things like EMAs that any new trader can understand. I don't like having too much shit on here. Even now, having this range identified, I'm going to have to get rid of that because it's just too much. And I'm going to also get rid of some of these because I don't want to see so many. We're going to go ahead and get rid of that one. And we're just going to leave those three because I think that's all we need right now. So as you can see here, we broke below, and we're now trading below all three moving averages, which is never any good. We want to be very mindful of that. I'm going to make this a little bigger so it's easier for you guys to see. We have fallen into oblivion on the SPY, but I do think that we have a saving grace here in this 374. if you can see, SPY has abided by these ranges very, very, very carefully and concisely over the past, call it six, was that about 6 months? Are we on the daily here? So yeah, about the past 6 months. And I think that consolidating in this area is a good overall thing for the markets. What I'd like to see here really is to see this hold at about 378. That would give me a pretty strong degree of confidence that we're not going to go into complete oblivion as far as price. Now, as we discussed, if you weren't on the stream a couple weeks ago, we went through this gap, right? This happened back in June. We basically gapped down almost $20 a share, which is insane. This was a multiple 1,000% move for anybody trading puts down here. But we mentioned that this is a particularly dicey area for the SPY. Below 403 or so, we have a lot of downward, very, very strong downward pressure, quick movements. And then we see the same thing to the upside, which means that the price action can absolutely rip through these zones at a moment's notice, which is why you need to understand these ranges. Because if you're not ready to be trading the upside when we have a break up, you're going to get destroyed. If you're not ready to trade the downside when we break down, you're going to get destroyed. Very, very, very important. Bounce 200 SMA, 200, 1014 weekly. Oh, yeah, there it is. If you go on the weekly. Yeah, about October 14th. You're spot on. Thank you. Thank you, Matt Johnson. Appreciate you. It did. It did hit. So that's I guess that would say that's the saving grace here. Now we need to abide by that 200-day EMA. And what I would really love to see, again, we have 374 mark because again, if we hold up for a little while, this EMA will probably meet us there. We would love to see another hard rejection off of this 200-day EMA, meaning we don't even cross it. I would love to see just a firm rejection. We touch it and then boop, price picks back up. If that happens, then we are headed straight for $430. That would be my price target on the bullish side. That's more of a longer term trade idea. But again, remember, we have to have a thesis so that we can have a plan so that we can implement and make money. Now, what does that mean? So your trading thesis is basically a speculative opinion of what you think is going to happen in the market. Bullish, bearish, what have you. Your trading plan is how you work that into your actual trades, and that's your implementation, meaning how much risk do I take? What trades am I taking? How effective are they going to be? How much money am I willing to lose? How much money am I anticipating I'll make? Those two steps, if you're not doing that, we will help you build that out. If you're not in our trading university course, you need to be. If you have never seen it and you don't know what I'm talking about, I'll drop the link for you. I would highly suggest you get in there. We have a free section where a ton of stuff is available. We have a premium section where even more stuff's available. Not a promo, just if you're lost in trading and you're losing money and you have no idea where to turn, this is the place. We will help you out of the hole and we'll help you figure it out. That's my mission and my goal. So back to the SPY. And again, we go through the SPY because it's kind of a macro market deal now. I feel like the SPY tracks pretty much the overall sentiment of the entire market, even though it's heavily weighted on tech. The U.S. economy is heavily weighted on tech. That's where all our growth is. So we need to be very mindful of where exactly it's going. And when we look at the S&P over long periods of time, we can see that we've got, just touching off these resistances here, we've got a pretty firm resistance right here that we need to trade above. And it's very interesting that we were rejected right at this point. So this is why understanding how to chart these names is extremely important, because then you are ahead of the curve, mindful and aware. So again, if you had been mapping this resistance right here, and we're going to go ahead actually, and we're going to take all this off the chart so we can make this extra simple for you guys, especially for those of you that are new. So if you guys have been watching this for a while, right? If you had been mapping out this resistance through COVID, we hit it, we came down, we rebounded, and then right about here, so that's October of 2020, you saw this breakout over this long-term resistance. Remember, this is the weekly chart. Let's zoom in a little bit. This is the weekly chart on the SPY, which means that this is a very, very significant price point. And you saw this break up at 340. You traded this to 472. You became rich. You became a millionaire if you traded this right. If you traded it from the COVID bottom, you made even more. So why is this important? Because as you can see over the last couple of months, we've traded in this range that has basically started to interact with this resistance. It's become support for a minute, then it breaks, then it becomes resistance, then it breaks. or then it holds, then it becomes resistance, breaks, and then becomes resistance again. These price points are important for you to know and have on your chart at all times so that you can be ahead of the trade. Whatever the next trade is, you need to be ahead of it. So we're getting rejected here and pushed down. So where are we going to go? Let's just map out. If we're looking at long-term trend support here, let's see what we got in the pipeline. Let's find this low. We'll call it, was that 111 or so? And remember, we just want to find points of confluence where we can map this out, right? Like as many touch points as we can get. And I would say that that's pretty good, right? So we found low here. This became resistance here, resistance, 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 and became support all the way up till it became support again after resistance, and then again support right here. So in the long term, in the macro, I would argue that we still have pretty strong bullish momentum in the long term, meaning 5 to 10-year outlook. What we do not have is short-term momentum to the upside. We had significant selling pressure coming in last week. RSI ticked down lower than we would have liked to have seen it. We didn't want to see it go below 45, but it did. We were hoping to see it bottom out at 31. But again, there's a lot of downside to see before that happens. And in knowing that, we have to trade it appropriately so that we can maximize our return. So basically, we're at the top of what I think will be our next trend channel or range. And we are just trying to figure out exactly where this is going to bottom out so we could trade it to the bottom, then trade it back up. Trade it to the bottom, trade it back up. Best case scenario for the bulls right now is that we don't break below 380. What is it, about 385, 381? Yeah. I think that's best case scenario for the bulls is 381. If this can stay, and this is long-term perspective over 381, I'd say that bulls can pick this back up and take it and run. Now, if we can't, then it's a different story, and we're going to be trading this down to trend line, which puts us anywhere between 355 to 370 bucks. Again, we discussed the intraday trade down to 379. I'm talking now about the longer-term opportunities that are in front of us. So, I talked a lot. We covered a lot. Quick pause. I'm here to I'm here to answer your questions. I'm here to give insight information on whatever I can. Let's hear them. Who's got questions? And while you're typing those out, as you know, I run a nonprofit in the substance abuse treatment space. We are currently in a contest hoping to win the best in the region in our area. If you guys can take 1 second, it's free. You can vote once a day for the next 20 days. You just send these 2 3-digit codes to this number, totally and completely free. We nonprofit organization. This could be huge for us in order to get funding and expand our Narcan program so that nobody has to die to overdose and to the disease of addiction. If you vote, make sure you drop a comment and say vote so that we can put you in our raffle that we'll be hosting at the end of the contest. For those of you that were willing to help us out, you can vote once a day. Please, 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 if you have a heart and you have a moment, don't forget to do that. Let's go back and see if anybody's got questions. Let's go back to the comments. I still don't see any questions. If you guys didn't like the video, make sure you like the video. Help a brother out. Drop a comment, like the video. Make sure you follow this. So every time we go live, if you hit that notification bell, boop, you'll get notified every time we go live. We trade 3 times a week live, meaning you can watch the trades in real time. And I would love for you guys to see it because it gives you really good insight into how to trade these markets effectively, especially if you love trading options or day trading stocks. So if we don't have any questions, we're just going to continue moving on. So we went through the SPY, the S&P. We got a couple of opportunities here. We've got 2 really good trades lined up, and we've got a longer term trade in the pipeline after we watch how this price action pans out. So moving along to some of the more interesting names in the next couple of weeks that we've been following for a while, one of them being Shopify. We have trend support forming here. We have to see that hold up. Again, we've already taken 200% on these calls. If you're still in the position, which I have some of it, if you're still in the position, we have to hold this trend line and abide by it as if it were the law in order to maintain green on these positions. I would highly suggest you set an alert on your brokerage so that you know if it breaks below and you can get the hell out. So that's our Shopify trade. And next up is Netflix, which has just gotten beaten absolutely to piss. Fell out of the trend channel, in my opinion. Trade's dead unless it holds above 275. We are still long on this stock from $200. It's been a great trade so far. We ran it up to 380 bucks, $180 a share on the alert. If you missed the alert, make sure you join the Discord so you get instant access to all of those. I would really appreciate it if you guys would also follow that voting instruction at the bottom of the screen. It's to help a nonprofit that helps addicts, alcoholics, and their families no longer have to bury their loved ones. I would appreciate it more than anything in the world if you guys could do that. It takes 2 seconds. You can vote once a day for the next 30 days. You guys mean the world to me for doing that. Okay, so here's a question. With SVB going down and having so many web-based companies in, is it safe to say that we are playing short or put companies like Roku or DoorDash or similar? That is a great question, Alejandro. If you're not in the Discord, make sure you join it because we've been discussing those exact things over the last couple of days as this has progressed. So I'm not sure exactly how much capital every company has in. Other than Roku, I have looked into that because it's a company that I've always liked. But we've recently shorted and traded puts on from $400 down to about 60 because it was not worth that. So in short, my opinion is yes. I think that unless the Fed announces a huge bailout for those companies to fund their payroll, I'd say that they're absolutely going to get shredded. However, I would be very cautious of taking large positions to the downside because of exactly that problem. What if the Fed comes in and says, "Hey, dad's here. We're going to take care of all this. Don't worry about it. We're going to fund your entire payroll. The taxpayer will pay it. Don't worry about it." The guy making 70 grand a year that's already paying probably 20 grand in taxes is going to go ahead and just cover your guy's bill because of your whoopsie. That's what they always do. So it wouldn't shock me if that's what they do again. Be very mindful of that before you take any of those trades because I think it is and could be a disastrous scenario if they do come out with that news. Um, Another great trade that we took recently that hit our target was Stitch Fix, S tickers SFIX. We pushed up to about $6 here. This was a good trade. We're now just consolidating in the trend channel right now. For those of you that are still holding some of the position, I think your main objective here is just to watch above 475. As long as we could stay above there, I think this trade could still have more upside to $7 plus. I would put that on your watch list, and I would be very, very mindfully aware of exactly where it is on the chart because you don't want to get caught with your pants down. This ticker we're looking at right now is SFIX above 475. And we will keep that on the top of our watch list as that was a great trade. Now, on to the next one that we have discussed many a times, which has been very fruitful for us, is our old friend PayPal, Paypalonius. So we already have our range identified here. This is an important trade to me because I think that this has infinite upside should we not see slashing and destruction in the banking industry. And Roku should take a large hit in the short term. I know risky. I mean, as I just said, if they get bailed out, no, not necessarily. If they don't get bailed out, then yes, they're probably going to get destroyed. So that's something to watch out. If they get that bailout, that's the one thing you need to be mindful of. So looking at PayPal here, we're trading back to the bottom of the range, which is no fun and no good, but we did hit our targets on this push up to $89 and change. We traded this on the breakout over 69. It ran up to $89 and change. We got our targets hit, profits taken. Now we are watching this to the downside to make sure that it doesn't violate the bottom of this range at our entry at about $69. There should absolutely be no losses here, guys. If at very worst, Shane, thank you, my friend. Once a day you can vote. If you do it, I'd love it forever and much appreciated. Again, nonprofit that needs the opportunity to get our name out there. $1 million hospital that took in $200 million last year wins every year because they forced their employees to vote. So we're trying to rally the troops, even though we don't have that kind of size. We're hoping that we can go in David versus Goliath and win this motherfucker. But anyway, PayPal trading to the downside. We have to take this here. If we get below $69, then this is going to be a hard exit for me. All done. I'm out. No more talking about it. No more looking at it. It's dead in the water. Worst case scenario for those of you who have taken a little more risk and believe long term and you don't want to sell for cap gains tax reasons. I just would watch the most recent low at 66.39. If it goes below there, guys, there really is no limit to how low it's going to go. Remember, this thing was trading at about $38 for quite a while back in 2016, and that's probably where it would head back to if it doesn't hold up. So, Craig, oh my guy, the number one host in all of podcast television. What's up, baby? we've got a Christmas tree here, and what we're hoping is that we can capture absolute bottom of range here and trade this back up so that this Christmas tree pays us for the next couple of years back up to $200. Again, remember, we were watching the breakout over $90, at which point then we will settle into some of our longer term options, targeting about $150 strike with at least a year of expiration once we get there. We're not there yet, so do not do that at this current moment. One company that stands to profit from these small banks getting destroyed is the one, the only JP Morgan. So as these small banks get rolled up and have this liquidity crisis, right? So they're insolvent. What happens to those banks? Take a look at Bear Stearns. What happened to Bear Stearns? I think JP Morgan bought it at $2 a share. Obviously, it was worth a hell of a lot more than that, but they were insolvent, so they had to take what they could get. And obviously, the government is involved in who buys what. So, JP Morgan, I would argue, probably is the best lobbying team in all of the land, and so they will definitely find a way to profit and benefit. This is kind of where I've settled at this personally. I don't like them. I don't like them one bit, but they won. It is what it is. And at the end of the day, as much as I've always supported our regional banks, and I want to, I can't take the risk of my family's security getting absolutely wiped out from under me because of some irresponsible banking decisions on their part. I do not ever see insolvency with JP Morgan happening. If it does happen, then we have we need to fight for food, water, and guns because that would be more of a global financial crisis than anything else. Right now, what we're seeing are small and mid-sized banks. They're not small banks by any means, guys. They're definitely quite large banks that are getting destroyed, but mostly, as I understand it, VC and startup cash banks. So one of the first things I did last night is we use Stripe for our payments that we take. I was happy to find out that they are managed by Goldman and another bank and not SVB. So any of your investments you're currently holding, I would look at the SVB balance sheet to make sure those companies do not have cash in the bank that is insolvent, because if they do, they're probably going to get absolutely shredded unless the Fed comes in and says, hey, we're just going to print all this money off the hard-earned taxpayers' back and make sure you guys can still buy a Ferrari. And that's what very likely could happen. But again, we're looking at the JP Morgan chart here. They stand to gain the most from this bank insolvency crisis as these small and mid-range banks become insolvent and get shut down. If there's a run on other banks, JP Morgan will probably be the benefactor in buying them up. I would look at the big four at the very least, because those banks will be the ones just swallowing up the rest and will continue to consolidate and centralize their power. It's kind of unavoidable at this point. Other than that, I think we have a couple of other opportunities to dive into. One that always seems to do well in a recessionary red market is none other than Intel. I actually am starting to kind of like this chart. Remember, we talked about the breakout over 2872 as where we started to like it. So let's map the downside now that I feel that we can confidently say we have it. And I'll put this ticker here. Love it's commenting it twice. We're currently looking at Intel. We have a really nice solidified range trading back to 2014, where we found bottom here before the next leg up, and then we found support near the top of that range. We came back down after coming off the highs back in 2021 when money was free, and we've traded down to about $25 on the bottom side, right? So we had strong buying come in off the bottom. That's a support bounce if I've ever seen it. The volume is substantiating our opinion that this has become support and it's bouncing here. RSI just double checks that and also confirms it. But I'm still going to wait until we see the top line break here at about 28.72. I'd love to see a breakout to the upside. We got a clear range we can move through quickly here. Again, when we went harshly oversold down to about $24, it moved very quickly through this range from $34 down to $24. It's a $10 move, which stands to reason that it could also move very quickly to the upside, an $8 to $10 move. So once we break that, I'm going to be looking at a couple of leap contracts. I will probably be adding some equities, as long as there's no like impending doom style news that would basically tell me otherwise. You're absolutely right about that. That was the dream. Jeronius P. Morgan. It's a terrible thing, but all my businesses are through Chase because I know my money's not as likely to disappear. And it sucks because I don't like dealing with them. But at the end of the day, that insolvency crisis or the threat of insolvency is a terrifying thing, and we need to be mindful of that. So once we see that breakout on Intel, I think we're just going to make this a very simple trade, and we're going to trade that support bounce up to resistance, which would put us right at about here. I would say max upside 45 to 46 bucks. If and when we get that break, I'd like to put at least a year on these bad boys to hold them long term, and I would definitely be adding some equity should we continue to see that upside. That is a very interesting one to watch. The other that I am starting to become interested in right here is actually Slamazon, Jeff Bezos and Co. I am very, very, very interested right here as we watch Amazon trade through this channel. So we're going to map it out for all of you options traders out there so that you can wet your beak, take a look, and see if it makes sense for your appetite. Because I found a range I really like, and it's right here. We got 86 to the bottom and 103 on top, which gives us about price window of about $17. It means that we could see a $17 swing up or down, $17 swing from bottom to top, because this would be a bullish play if it can hold up here. What I'd like to honestly see, as we can see here, we have this nice little inverted hammer that typically will typically indicate support if it's substantiated by volume, and it's a reversal from downside to upside. Whereas inverted, or that's just a hammer. Inverted hammer at the top, no bueno, not good. It means that we're going to come down. So we've got a supply zone from 103 and up, meaning sellers are right there ready to dump their shares as the price climbs above that point. And then on the flip side, buyers are typically looking like that's pretty weak volume. So I wouldn't say they're ready to step in. They were eager here back in 2020 when Amazon was trading around 81 bucks. They were eager to buy then, which is important and awesome. But we have to see that same sentiment here as we come down and test this $86, $87 mark. If we see strong buying come in, then I think this is going to be a phenomenal $100 call opportunity, meaning I like that $100 strike price. I think that gives us enough wiggle room to trade the upside without taking on a ton of cost basis of trading something closer to in the money. So if we get that support bounce here, right, again, write this down, take some notes, map this out on your chart. I'm giving you these trade opportunities before they even happen so that you can do this in real time and maximize your capability to make money. So as you come down to about 86, 87 here, we need to see a strong support bounce, and then we want to see strong bullish momentum to the upside. We want to see volume come in, and we want to see this touch about 100 bucks. If we do, scale out of those bad boys and we'll reposition, because if we can break above 103 and hold there, it means that we'll probably see 120 to 144 bucks. Remember, this is our long-term support, and thus will become our long-term resistance. We want to be very mindful of that so that we don't take this trade the wrong way. Amazon is a very interesting opportunity here. Should it hold up, I think it actually is pretty poised to succeed. I think that they're just in a great position to continue to capitalize on the market. And then let me pull up this here. I got a small cap opportunity we're going to talk about for those of you that just want to do stocks. I totally understand. It's one that I am shocked that I'm going to pull up. It was a huge moneymaker for us in the past. And I want to preface this with the fact that look at this chart. It's like the most ugly and egregious thing I've ever seen, but it's got upside for a trader. This is not a long-term idea. This is not anything I would take and hold. This is something I would quickly scalp in and out, maximize your profit, minimize your risk, capitalize on the trend, and get the hell out. So if Tops comes down off this trend line around 91, 92 cents tomorrow, I would like it with a very firm stop in place. Do not take it without it as a day trade. And I would aim for probably a dollar plus. If this thing gets volume and a momentum, as you've seen here, it's pushed to 125 or higher. It is an absolutely atrocious stock that, as you can see here, is just like the worst thing in the world. That traded up to 215, and within minutes, not within minutes, but in 2 days, it was down at 85 cents. So take that under advisement. This is an extremely high risk play, but could be an interesting day trade opportunity that I think everyone should watch. If you're not going to take it, at least just put it on your watch list and watch it play out and see if you would have traded it the right way. That's number one. And then number two, let me find this here. Give me just a moment. If you guys have any that you wanted to look over, feel free to leave them in the chat. I might not get to all of them, but feel free to comment the ticker in the chat. And if we get some time, we can go over them. Oh man, I thought I saw a couple the other day, but I'm not. Oh, the VIXie's looking interesting. Mostly short. Wow, UVXY had an absolute rip from 5 to 7, so volatility, implied volatility went absolutely crazy. And it looks like across the board, banking. Wow. So if any, I don't know if anybody knows, is Signature Bank done? Have they gone under? Western Union getting slammed. Come on. I'm trying to find an interesting opportunity that no one else would be looking for, because that is our greatest advantage. Wow, the Daily Bear Financial ripped. Ooh, one that I've actually always loved. GEVO. Look at that. Would you look at that right there? Mm, 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 mm. I love it. I love it. Interesting. So, this is a small cap, I don't know, it might even be micro cap, in oil and gas that is looking quite spectacular. For those of you that don't remember, this was a COVID banger for us. If you were trading with us, you made an absolute killing on this thing. We traded this down from the pennies all the way up to, I think it went north of 20 bucks, did it? Or was it 15, 16? It went to 15.50. Absolutely unreal trade. It has continued in a little bit of a descending pattern here, consolidating, but we've finally seen buyers come back to the party as it bounced off of oversold. Let's find this RSI of 22. New low on the RSI. So that's confirmation the trend is likely to continue. However, we had buyers step in with a nice little bullish engulfing little baby candle here. And I think this one could be particularly interesting for us. This is not going to be a trade I'm taking right off the rip, but I'm going to put it out there as a nice little watch list item because I think this could be pretty interesting. If we can come above 175. So let's look at this as breakout above. Let me put this in here for you guys. 75. Very interesting because if we get above 175, we're back into this range, which is good and gives us opportunity for an easy 20-cent move. Honestly, this thing can move relatively quick. Let's check the float really quick. Let's see how many shares are available in this float. Ooh, 200 million. Wow. Almost 20% of the float is short. Very interesting. Very interesting for this little small cappy. Cash per share 188. Not bad. No PE I don't see, but earnings per share this year 57%, but next year they're projected at negative 100%. What in the hell? This company's grown for the last 5 years, but no new price targets that are favorable from right here. Stock price is still up over 107% in 3 years. Interesting. So I'm seeing, what is this? Why are people tagging the Silvergate banking thing with GEVO? Did they have cash with SVB? Does anybody know the answer to that? If somebody could check that quickly, because that's very important before we really explore this. If they had cash with SVB, that is no bueno. And this is going to be a stay away. And then when you go to the weekly, it's even worse. So I was just kind of hoping we get a nice, sexy reversal here because we did see price action pick up, come back down, and really try to make an effort to get above that 175. But if we don't, then dead in the water, ignore it. Interesting. Oh, we could talk about corn. That's commodities have absolutely taken a dump. So this was basically my make or break. It broke the trend line. It came back down, and we're done for now. We took this trade at about $15, right around here, I believe. If I'm not mistaken, this went up to 30. It was a 100% banger. Double your money, double your fun. It's currently trading at about $24. I would say that's your best case scenario on range if you're still holding. This one has to hold here. You've got a little bit of consolidation and support here, a little bit of touch, not even touch there. So that would indicate strength. It closed this gap, right? And it's got a quick gap to move through down to 23.35. I would watch that very carefully. Again, look at this zone of selling pressure and how quickly it moved down. You always want to be mindful of those so that way you don't get destroyed on a trade to the downside. That's what we're looking at right now. It's a corn ETF. This was a phenomenal commodities trade. If someone wants to pull up the original alert, that'd be awesome. You don't have to. I believe we traded this at about 15, $16. It doubled over 100% return. This was a fantastic growth play. I'm really happy we took this trade, and I hope you guys made some money with it. Um, yeah, we're actually ahead on time here because as I do this more, I get a little more organized. I actually outlined this week of what I wanted to talk about, courtesy of my friend Craig O. I don't know if he's here, but I took a page out of his book and I just decided to outline it to make it a little more efficient for those of you that don't have a lot of time but want to get your information. Um, Pepsi's interesting. Ooh, Pepsi might be kind of interesting, actually. I don't mind that. Why does Pepsi look so strong? There's something I don't know. So earnings were 21 billion Q3 of 22. How in the hell are earnings 80? Oh no, it's revenue. Is that revenue as well? How is revenue 4 times that? Oh, that was fiscal year. Excuse me. So 22, 20, 16. So there's growth. I mean, COVID had to be great for them. New Diet Pepsi flavor. I think that's why. Why is Pepsi growing? This one's interesting. Worth a watch, in my opinion. Worth a watch. Now, as long as it holds up, because again, Pepsi's pretty much abided by this trend line here. So if we see anything in contrast to that, then we need to be very careful and mindful because we've got a nice, very clearly indicated range here that I really enjoy that we need to really, really, really see hold up. So it's top, bottom. So it's got to stay above 170. Otherwise, we wait for 163. And if it hits 163, we trade puts to 163. And then we could trade the bounce back up, which we'd likely see. I think those are your three options with Pepsi. Is like those are the three I'd watch. So if you're long term on Pepsi, this is a great and phenomenal way to sell calls against your position. If it breaks below 170, I would sell like the 171, 172. If it breaks below 163, you could sell the 163, but you could also trade puts to this to the downside. So again, we want to see it above 170 down to 163 and then 159 if it can't hold. At which point, then it might be a really interesting long opportunity. We had significant buying way up here, which sucks for them, but unless it was share buyback. But it's actually got a pretty strong trend, one of the strongest. Let's go to the weekly. That's really interesting. Pepsi. Who would have thunk it? Who would have thought? Let's see if we have some confluence there. So that's the breakout it needed. So it got rejected there. So it's got to break up and hold. That's your Pepsi chart. Write that down. Write that down. Okay. Let's, in honor of Mr. J, let's take a look. What the hell is Bitcoin on? Oh, there it is on Webull. Oh, wow. It's got some girth here. It's got some strength here. That was a pretty interesting support hold. So to 20.6. Pivotal in my opinion. I haven't taken too much time with this, but I'll tell you right now, if I saw this on any other chart, I would say pivotal. And that's where we saw such strong buying at from before. So if we get a squeeze here, you could easily see this thing double. I don't think that's crazy or out of the question. If you're trading crypto, you're watching Bitcoin, I would be very, very aware of that. That there's nothing really stopping that from happening. Because as you look, this range is so interesting. It rips through here to the upside, comes down to the downside, down to the downside, and then downside again. It rips through this range. So basically from 20 to 40, it's like a free for all, and it just likes to rip through that zone. So if you're long here and it rips to the upside, this could be a phenomenal opportunity to make a ton of money, as long as it holds up here. So as you can see, we've got those EMAs on here. That's just the 8 and the 13. Let's go ahead and put that. Where the hell is the 200? 200. Oh, didn't put it up there. Sorry. So that's your resistance right there. That's kind of what I had assumed for Bitcoin. That's where it's going to bump its head. We got to get this over 25K, give or take a little bit of change, right? Doesn't matter. I'm not talking exact numbers here. We got to get this above 25K. So last time we got a support touch here. Let's look at last time we saw breakout. Never, because, well, I guess right here, but this has always been above it. So last time we will have seen an occurrence like this, if it breaks above, would be 2019. So this is the equivalent to buying in 2019 and watching the historic rise to about 70K a coin. What does that mean for you? It means that it has held steady on this trend all this time, right? We traded through the median line because we wanted to know, okay, based on resistance and support, where can we expect this to hold up? We got it. Support, 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 held, and then we got a support bounce again. Now, what most people are saying, and it's something to just be aware of. Well, I don't think it's happening, but it should be aware of it. It's like everybody's saying dead cat bounce. And if I just looked at this chart first glance, I'd say, yeah, dead cat bounce is the most likely until it breaks above right here. I would say I would just like to see it above 24.5. Above 24.5, I think we really start rocking on something. And I think there could be a lot of money to be made here. So as far as Bitcoin goes, I would say that I think it's my opinion, it's like I don't know, it accounts for about 30%, I would say, of like money stored away in long-term holdings, not like active trading, but money stored away, because I think it deserves that. I would do more if I felt more confident, but honestly, it's just so new that you have to always manage risk, keep your family first, and take care of yourself. So if you can take more risk, if you're young, single, and you don't give a shit, then by all means, I think that's your move. There's a ton of upside here. Again, we can double from this price, and that's a pretty interesting opportunity because, as you've seen in the past, let's break this down into weeks. Let's go to months. Keep this simple. If you bought this support bounce right here, like 10K, right, back in 2020, you 6x'd your money in 1, 2, 3, 4, 5, 6 months. You 10x'd your money, or sorry, you doubled your money. I don't know how that would work with compounding interest, but nevertheless, 6 times. 600% banger in 6 months. You got 100% a month. If you did it again, support bounce back in July of 21, you took it from 30 to 70. You basically doubled your money and then some, right? Doubled your money over 1, 2, 3, 4, 5 months. So not as significant, but still a lot of money to be made. And then in this downside, there was a huge short to be taken. Once it got rejected at 45.5, that was a huge short. I know that Jay, Lee, a few of them were all over that, down to about 25K. So you doubled your money again. This is the one to double your money. So what we have to see here, if we go to the monthly chart, we see it's struggling to stay above that EMA, right, at about 22.5. And then the next target here is 25.2. Above that, and then we're trading against resistance, which we have some room, but we have to break above it. And then I would say 45 would be my next target. Obviously, to me, it's long-term hold, so I wouldn't even mess with it. But if we're just sticking to the daily, we got that break up here. And the last time we saw this kind of bounce, we saw a pretty significant move at least 20% from right there with our absolute bottom back in 2022 down at 16 a coin. I mean, that's some dicey stuff. But again, this is a different threshold of risk and it's a different market to play in. But if you have the capital, the know-how, and you're willing to take the risk, I think that right now is a pretty interesting opportunity to do so. Should we continue to move, I would say, to the upside over 24.5, I'd say you're going to get a pretty strong push back up into the 30s, at which point we need to contest with this resistance, and we'll deal with that when we get there. But for right now, I'd say that this is a hell of an opportunity. Again, going back to the weekly long term, we're green here. We got to go over 24.5, 24.7. We got to get over 24,700, give or take some change, right? So it's called over 25,000. Over 25,000, you're golden. You're going back to the 30s. You made a nice bit of money. You nearly doubled your money if we hit 40. That's how I'd play this chart if it were up to me right now. And it was how I'm probably going to play this chart now that I've looked at it, honestly, because I think this is a really interesting opportunity. But of course, Coinbase moved a bunch of their stuff around, which is super obnoxious. And I got to go to the website and create a new sign in with a new account. I don't like that at all, but centralized, eh? But I'd say on the whole, we covered a lot. And I hope this was much more concise, organized, easy, better flowing than the last couple. I feel like we had a much better flow to things this time. Would you agree or disagree? Just give me an agree or a disagree. And thank you so much to all of you that liked the video. Really appreciate it. For those of you that subscribe to the channel, love you even more. I would really love to hear your thoughts. Did you feel like this went a little bit better? We always want your feedback because, again, you're the ones here looking for the information. So I want to make sure that it's stuff that you care about, you want to see, and that benefits you in the long run, or why else are we wasting our time? So in looking at this, what would you say? Better flow, more consistent? What do you think? I'll take what I can get. Thank you. Thank you, Yolanda. Yolanda always making me feel nice. Always making me feel nice. Is that your actual shoe in that picture? Or is that a statue? I can't tell. Thank you, my friend. I appreciate you. You got a nice parkway in your picture. Thank you, Shane. Thank you, Shane. Thank you. Thank you. Good, good. You know I need the validation. Come on, guys. Come on. Do this for you. I'm here for you. I got to know you're liking it. I got to know that it's helpful. Otherwise, there's no point in doing it. This is going to be an interesting week. And I think that with the plan that we laid out, I think that this is like our best position forward. I think this is honestly the safest place to be right now in terms of trading this market. Guys, I really, really do think that those two trades that we laid out on the SPY will be extremely beneficial. We've got quite a few more. We went through PayPal, we went through Shopify, went through Netflix, and a few others. We went through GEVO. I think that those are the trades that I'm going to be watching most closely because I think that they're the most easy to plan and map out, and they're going to be the most consistent in terms of result. And also, I think that we are going to be in the best position to move forward and kind of watch this week unfold, because it's like that's the thing with trading that I find most interesting is like not only do you have to have a plan, right? Like not only do you have to know what it is you're anticipating and then have a plan as to how you're going to capitalize on that, but you also have to take in this constant new stream of information and then put it into the frame and context of the plan you've made. And so if you can't adapt in real time, that's why we map out the bull and the bear scenario, guys, because we need to map this out in real time. And if you guys are following the stream and you're mapping this out, you have the whole plan. So like you're waiting for Amy, you're waiting for me. You don't even need to. You have the whole plan. You can do this yourself. That's the point. That's why we're doing this. My goal is the tide raises all boats. The better traders you are, the better we all do. And the more prepared you are, as long as your thesis is correct, the better you'll do. I mean, the better you do anyway, because at the end of the day, if you're managing risk appropriately, you're never taking. I mean, that's my next question for all of you that have been here this whole time with me. In the last month or two, have you had one loss wipe out an entire week of gains? Like one individual play, one loss. If you've had one loss wipe out an entire week of gains, just say yes. If you haven't, say no. Let's see it. Honesty is the only way through. The only way out is through. Has one trade eradicated a week's worth of profit? Or did you have one big loss that wiped away a month's worth of profit? Basically, my point is here, has anybody still experienced, and I ask this not to embarrass, humiliate, or call you. I want to know so that I know that's the person that needs our help the most. That's the point here, is that we need to know, or we're not going to be able to give you the help that you need to no longer experience that, if that makes sense. When people tell you they're fine over and over again, you stop asking how they're doing because they told you they're fine. So, as I've learned a long time ago in recovery, is like closed mouth don't get fed. All right. So, for those of you that said yes, thank you for pushing that out there and letting me know. Send me a message on Discord. Let's have a chat about it. If you could, just write a little bit. Hey, here's what happened. Here's the trade. Here's where I'm at. Here's how much I got left. What do you suggest? And we'll map out a plan. We'll make sure it makes sense. And within the rhyme and reason, I might not get to all of them tonight, but you will hear back from me over the next 2 days at the very latest. And in the meantime, if you had that one trade that wiped out the rest of them, please God, there's nothing you're going to miss. You will miss nothing. But tomorrow, trade nothing. Make sure you have a paper trading account, and we're going to work together, and we're going to get this right. I've got 4 or 5 members right now that I've got them on the same deal. They did not like it. Straight to the paper, baby. Paper trading only. And guess what? Well, 3 of them that I've heard back from have had 2 consecutive weeks of success paper trading. 2 consecutive weeks, whereas they'd had one loss that wiped out the rest for 2 months. So they're already progressing in the right direction. And we're going to start influxing real cash soon, taking those trades and seeing real money come in. But we had to make sure we practice the skill first. So if that's you and you've had that one loss that has wiped out the wins, all you need to do is send me a message at Big Quench. It's right there on the screen on Discord. I will get to them. I got to get home to my kids after this, but I will get to them either later tonight or tomorrow and get back to you. And we'll work together on a plan so that this makes sense. The whole reason you guys are here with us is because you're investing in yourself and your future, and that's the smartest thing you can do. So it's up to us to help you do that, even if you struggle. And you'll be just fine. Don't you worry. You'll be just fine. Just fine. It's really hard to keep that perspective. And I know that when you see like real money going out the door, like let's say your check for last month was $3,000 and you see $1,000 getting lost and it feels like, well, shit, I worked a lot for that $3,000 and I just lost $1,000 in 5 minutes. I'm not taking away from that loss or saying it's a small amount of money because it's not, but it's $1,000. You'll get it back. If you do this stuff right, if you do these few simple things in the way that I walk through with you, you'll laugh about that. That loss will be the best thing that ever happened to you, just like it was to me. That one loss gives you all the wisdom you need to not experience it again. And you will have losses, but the important thing is that as long as those losses are not wiping away the gains, you're just a normal trader that's making consistent profit. You take your losses where you take them, take your wins where you get them. But most importantly, that ratio is always to the upside. You're making more than you're losing, and thus maximizing your time and your opportunity and your profits, and you've changed your life for the better. Most importantly, if you have kids, if you have family, you've changed their life for the better, because this is information that has always been guarded from the public, and our goal is to make it free to the world. This is a great one. You're absolutely right. So one, like this small thing will change your life and it'll piss you off because it will cap your gains at times. But guess what? You're never going to get destroyed again. Any position that's less than 6 months to expiration, right? So anything but leaps, I always open it as a vertical. Like we're at the end of the trading day, right before we close. If I have like 200 calls on something, right? I will sell the 205 call, same expiration, and hedge my entire position. And then in the morning, based on how it opens, I'll close that short, let it ride, and then I'll do it again. Because guess what? If it comes down for 2 days, you close that short and you made 50%, you made all this money back, but you hold the long and then it goes back up again. You've basically made money twice. You double dipped. You made money to the upside and the downside without ever having to sell. It's a beautiful thing. And like on Netflix, for example, when it hit the top of the range and I added the short and we went back down, it's beautiful. The whole position cost me about 3 grand. I made 1,500 on the way down. So now it only costs me half because I bought the short back. So I can risk $1,500. So basically, the position can go down to negative 50%. And I've still made money. It's a beautiful thing. I mean, obviously, I don't want that to happen, but that's the beauty of options. Everything can be hedged and managed the right way. It takes a little bit of work, but you absolutely can do it. You can absolutely do it. So, um, last chance. If you have any tickers, post them in here. This is just one I wanted to look at. We've got our Nvidia calls. They're up over 200% from the $10 to $12 entry. So like if you entered high with me, that was my first buy, you're up 200 something percent. If you bought the bottom when we alerted the second buy, you are up like 42.7 to 42. You're up like 600%. So I hope if any of you is, send me a DM and let me know, because I will give you a high five and we'll congratulate and celebrate together. You made a killing on those. Nvidia is one of my favorite plays we've taken this year. I think it was one of the smartest trades buying this breakout. We bought the support bounce 127. We were spot on. It ran, opportunity to take profit, came back down, opportunity to take more profit. This was a phenomenal trade that was very well planned out. John, my friend, thank you. No one has given a shit about this hat. I personally love it, but I don't think anybody else liked it. And again, we need to get an actual designer. So if anybody has experience designing clothing, also send me a message, because I might have an opportunity for you of a lifetime. But if you wanted this hat, you can have it, my friend. Just sent you the invite to the channel. Give me a second. We have a bunch of merch and swag. If you want to represent the brand, go right here. There you go. That's the link. It's all on there. But I love the hats, and they're extremely well made too, I gotta say. Yes, absolutely, man. Absolutely. And we could talk about that later, but I have a theory that a lot of people are actually, and myself included when I say this, almost addicted to the loss in a sense. Like the emotional reaction it elicits is more enticing than the win. The win doesn't feel as good. It doesn't make you feel enough. And so people don't want to sell when they're up because they think it's not enough. But then when they're down, they think it's already too bad. It's like ironic. It's like when you're up, it's like, well, it's not enough profit. And then when you're down, it's like, well, it's not all the way down and I'm already in the hole, so I might as well stay. No, we got to work that out of our minds. That's why we need the thesis first to understand what we think is going to happen with the market, trading plan second, so that we know how we're going to trade that market. And then third is just quite simply following those simple rules that we set for ourselves. That is it, and that is all, my friends. All right, last one. Boeing, just for you, my friend, Mr. John. I haven't even looked at this one in a while. Oh, interesting chart. Well, I know that we did trade that breakout. This is the last time I looked at it. It was back in October of 22. That was a hell of a trade. Let's go to the daily. Ooh, it's dicey, but buyers are trying to step in. There's a significant purchase there. So I would like to see this over 205, and then I think we can start chatting about it, because they had that gap down. Buyers came in, held there. I'd say above 197. That's where I'd look at. Above 197, that's your make or break if you're bullish. If you're trading it both ways, I would say below 197. You got a good opportunity to trade this thing back down to probably 170, 185, and then 170s. Because look, this thing loves to gap down and up. Like it's absolutely madness. This is like where you can either make or break your account with options with Boeing. So I'd always hedge these trades and always trade smart. Don't get greedy. Don't overindulge. And basically, yeah, that's how I'd trade that one. So for those of you that didn't get a chance to look, again, I thank you for your 2 seconds of time to help a nonprofit organization dedicating to helping people. If you send these 2 codes to the phone number below, it is completely free. You can do it once a day. You are helping the best nonprofit organization you could ever dream of that always helps people, continue to help people in a greater scale. If we win that contest, we will hopefully get access to the grant funding that always goes to the rich guy at the hospital, which they then put in their pockets. So you would help us greatly. We would appreciate you forever. We've helped over 1,000 families over the past 6 years, and we want to continue doing it. And this will help us in our mission to do so. For those of you that know, I've been in recovery for 6 years, so it means a lot to me personally. And I know some of you are as well. So it would mean the world if you take 2 seconds out of your day every day and just send those codes. It's free, doesn't cost you anything. It's 2 seconds of your time, and you help some good people continue to help people. And I'll leave you with that. If you're not in the Discord, you need to be in there. You absolutely need to be. The link's right there at the bottom as well. So make sure you go check that out and you get in there and make some money. And I love y'all, and I hope you stay blessed now.